grab the horns. Today, let's go ahead and discuss a few more IPOs that have recently come out in this market, see what they're doing. Obviously, we're in kind of a rough market, rough economy right now, so let's take a look at what a few more IPOs are doing in this market. Okay, so the stock that we're going to start with here is a company by the name of e-commerce China DangDang Inc. Ticker symbol is DANG. Now, this is DangDang's homepage here. They're an e-commerce site out of China. They put this together. This is what their homepage looks like. Now, let's go ahead and jump right into the stock here. Its stock shares have been decimated since its IPO date back in December of 2011. The stock did reach a high of about $36.40 about 1 month following its IPO. Again, that was in December. But since then, it's dropped to its current low of about $14.10. Now, this represents a drop of almost 45% since its IPO's closing price here. Big drop, not something you really want to see with an IPO coming out. DangDang is experiencing a lot of these problems and a lot of this sell-off due to the anticipation and now the expired lockup of its shares earlier this week. Now, its float, which was originally at 19 million American Depository Receipts, or ADRs, has extended to 58 million ADRs. So this is definitely something that you want to keep your eye on. This is a stock that is a bit concerning right now. You can see it had a giant drop here, especially in the last month. All we've seen is it go red, and the volume, even though not a lot of volume, it's been picking up higher than we've seen in the green days. So the next stock that we're going to look at is a stock by the name of Youku. Ticker symbol is YOKU. Now, Youku is slightly above its IPO closing price. This is Youku's homepage right here. This is what it looks like. But again, it's slightly above its IPO closing price. It reached a high of about $69.95 back in April, but it's fallen back down since then to about $32.97. So like DangDang, its price is deteriorated, and it's also due to the anticipation of insiders selling ADR shares and following a lockup exportation earlier this week. Now, the available shares will increase from 30 million to 50 million. So again, another stock that we're seeing this happen with. Again, another stock over in China, so this is a bit concerning. You really want to be cautious of this. As you can see with Youku, it's similar to DangDang here. We're seeing quite a bit of a sell-off here in the last month. Again, Youku is not as bad as DangDang, as its price is still relatively close to where it IPO'd at, but it's well off of its high of $69.95 back in April. Now, investors have been correct in selling both of these companies before the expiration of the lockout shares. China-based IPO stocks have been very, very consistent recently in massive insider selling, which represents a lack of confidence on the part of the management in their own companies, which is just crazy if you're thinking about investing in something like this. Why should you go and invest in a company that the owners who actually own the company don't even want to invest in themselves? So you really want to be cautious of that. If you really want to get into the Chinese market and you just feel like, hey, I've got to be in China, best bet for you is Baidu. Again, ticker symbol BIDU. Covered a story on this just the other day. It still offers the most compelling story for any IPO coming out of China. Obviously, it IPO'd a while ago, but still the most compelling story for any Chinese tech stock. So I hope that this information helped today. Hope this helps you make some good trading decisions out there in the market. As always, get out there, grab the horns.